Josh, thanks for joining us today. We are keeping the election theme going and really trying to understand what implications will impact our decisions and our clients. So today the focus is on market impacts. So, I think first and foremost, this isn't our first rodeo with elections, right? We can look at how the market reacted under a host of different circumstances. And the data tells us in the long term, there's very little impact to the markets and the trajectory of markets based on political elections. That being said, there's some nuanced, policy proposals that we should be aware of.
Absolutely. So no matter who wins, the market goes up. That's what we try to look at when we focus on the long term. But we do know that there's some concerns, some questions we get from clients. So we want to think about two real policies in specificity about how they're going to impact portfolios and the broader market. So the two that come up a lot are taxes, mainly on the corporate side, and trade, meaning tariffs overseas. So if we focus on taxes for a moment, Harris's campaign is really focusing on the corporate tax rate potentially going up from 21 to 28%. Not back to the 35% tax rate it was previously, but still an increase. And on the Trump side, there's been discussions of further cutting that tax rate down to 15%, actually. So if we think about how that impacts markets, it's fairly straightforward. As more taxes get taken out, could impact earnings, which could impact valuations. Again, over time, markets tend to figure that out and companies figure out how to manage around taxes. But from an instantaneous reaction, you could see a move up or down in the market surrounding taxes.
Makes sense.
Absolutely. The other one being trade. So when we think about Harris, it's really remained tough on China. Potential tariff implications, steel and aluminum from China have been mentioned in specifics. If we think about Trump, it's been much more aggressive. 60% tariffs on China, a 10% baseline on anything coming in from a U.S. import perspective. So while tariffs can be very U.S.-centric, can promote some reshoring, it does take some time to build out some of that infrastructure. So in the short term, you could see some prices go up, which could lead to inflation. And inflation has been a big part of what the Fed looks at. And that could impact some of the interest rate expectations moving forward. So when we think about those, they could have short-term implications, but not sure if that's really going to impact long-term themes overall.
Well, a perfect segue to our philosophy, which is to be long-term oriented because our clients have long-term investment and time horizons. And so while we expect some short-term implications, I think it's safe to say that some of the proposals out there, at least as of now, are not impacting tactical positioning of the portfolio, nor do we believe that they should. I think in general, we're focused again on the longer term market cycle. And there's some positions in the portfolio that we continue to maintain as a result of that, like our focus on quality large cap companies in the US, quality fixed income options in the portfolio. And it really comes back to the planning work. And for any market cycle, particularly when there might be some more uncertainty in the short term, understanding what the cash needs are from the portfolio and making sure that cash is protected is really critical.